Amazon, the e-commerce giant, has once again captured the market's attention. After a stellar earnings report, Amazon stock has skyrocketed, surpassing the $200 mark. In this video, we'll dive deep into Amazon's business, performance, fundamentals, and valuation to understand why this tech titan continues to dominate. Amazon is more than just an online retailer. It's a multi-faced company with a diverse range of business. Its core is e-commerce, where it offers a vast selection of products. Amazon Web Services (AWS) is the leading cloud computing platform, empowering business worldwide. Additionally, Amazon generates a significant revenue from advertising and its subscription service Amazon Prime. Amazon's performance has been nothing short of impressive. Over the years, the company has consistently grown its revenue and market share. Recent earnings reports have highlighted strong growth in key segments like AWS and advertising. While the pandemic accelerated e-commerce growth, Amazon's focus on long-term investment and innovation positions it for continued success. Amazon business model is incredible high quality and is well diversified. But is the fundamentals aligned? Let's look into it. Market cap of $2.2 trillion makes Amazon one of the biggest company in the US and in the world. It's trading at a PE of 44 and a forward PE of 32, which is incredible high for historical standard. But you shouldn't look into this PE because it can be extremely misleading because Amazon is one of the companies that is investing a lot in their future and in growth. For example, in the 2020, they were investing a lot in warehouse so they can keep up with the demand. And right now they are investing a lot in their AWS and AI. So this extreme high capex budget can be a little misleading sometimes. So we should look into in a deep dive so we can understand how Amazon works and what is the growth potential of the company in the future. That's what you should evaluate. They've been growing around 20% per year, which is really fast. Gross margins around 48% and growing, which is really great margin for a company like Amazon. Their net margins are around 8%. I do believe it's low for the potential of this company, as I've said, because they are investing a lot in R&D, in capex. So this could be a little misleading. Amazon profit potential still has plenty to grow. That's why it sometimes is difficult to understand why Amazon has a such high P because they invest a lot in R&D and their capex budget is incredible high. Even when you compare to big companies like Apple, Microsoft, Google, these all big companies have low R&D and low capex budgets. For example, when you compare to Amazon. Balance sheet. Amazon has an incredible balance sheet. They have more cash in hands than their long-term debt. So their returns are going up, which we love to see. Return on equity around 22%. Return on investment around 12-13%. Above the 10% mark we always like to see. Last 5 years, their return on invested capital were under 10% because they were investing a lot and they are not taking profits, so it takes a bit on the return on invested capital. That's why you don't see Amazon with high return on invested capital. But when they optimize profits for the future, durability, they will have a high return on invested capital. But looking to our money journey checklist, we have two axes, but this is two axes that I'm not worried about. Revenue growth, it's a check, growing 20% per year, which is really good. High gross margins above 40%, around 48%. Net margins are under 10%. I usually like to see them above 10%. Preferably, I like business with high net margins or free cash flow margins above 20%. But I do believe Amazon has the potential in the future when they optimize the business. I do believe they can have margins around 15-20%, which is really good, and that's why I really like Amazon, for example. They have low debt, basically. They can pay all their long-term debt with the cash in hand they have, or with only 1 year of free cash flow. Their returns on equity are really high, above 20%. Return on invested capital is growing. At the moment, this year it's above 12%, and I do believe they will grow in the future. In terms of moat, competitive advantage, Amazon has plenty of competitive advantage. Each business segment has their competitive advantage, and they can have all the synergy in the business. So I will not talk about that. Everyone knows Amazon. You buy from their marketplace. You Most of the biggest companies use AWS. They are investing in AI. Their advertising business is growing a lot, even faster than Meta's and Google, and they are taking market share. They have their subscription business, so it is an incredible business model. They having free cash flow positive and having profit, even though they could have the double of the profits if they are not investing as high as they are. But one thing I don't like, they are not returning capital to the shareholder. They are not doing dividends, not doing buybacks. But I understand Amazon has plenty to grow ahead, and they're investing in their business. And if I have to choose a company like Amazon to what they should do with their free cash flow, they should be doing dividends, buybacks, or investing in the business. I will take the third option every time. So they are doing what is the best for the shareholders, in my opinion. But fundamental wise, this is a great company. I do really like their business model, but we have to talk about the price. Is this company undervalued, overvalued? What is the price you should pay for Amazon? So I've done my discounted cash flow. It is a US company. I would say the risk, it is a safe investment. So for the what we have the right now, I would use a discount rate of 10.5% for my base case. Of course, for my bull case, I will use a higher one, and for my bear case, a lower one. But I will talk about my base case. I'm expecting a growth rate of around 11% for the next 5 years and 8% for the last five in my 10-year analysis discounted cash flow. Bear in mind, for 2024, they are expecting to grow around 11%, 2025 11%. So I would say I'm in line with analyst expectations, but this is not conservative. But I will take this growth. I will add margin of safety in other assumptions. For a PE, I would assume a PE of 21. I would say it's pretty fair for a company like Amazon, above the mean of the S&P 500. Right now, it's S&P 500 is trading at the PE of 25 or whatever, forward PE of 21. So it's in line what is the PE of the S&P 500 right now, but we know that's pretty high for historic standards. So I will assume a premium for Amazon because they deserve it. But the difficult part is assume margins for the future. What should be the margins of Amazon in 10 years? I do really believe if they optimize for profits, if they reduce their capex and their R&D expenses, I really believe they can have margins probably above 20% or around that. But I will be conservative in the analysis because Amazon has a lot to prove in the future in terms of their margins and net profit or free cash flow margins. So I will assume a 15%, and I do really believe, even though they have 8% net margin in the last year, I do really believe they can have 15% net margin when they optimize their business and create all the synergy. Right now they are investing for the future, but they will not grow at this pace forever. And when they don't see any more opportunities to invest, they will optimize for profit. So I will assume 50% for my base case. With these assumptions, I will do my bull case and bear case, of course. I came with an intrinsic value with a margin of safety already of $141. When you look to the value right now, it's trading above $200. But bear in mind, the company was trading under $100 in 2022 and 2023, which was an incredible opportunity. In conclusion, Amazon's dominance in the e-commerce and cloud computing industry is undeniable. Its strong financial performance, innovative culture, and long-term vision position it for a continued growth. While the stock may be volatile, investors who believe in Amazon's long-term potential may find it a worthwhile investment. As always, it's essential to conduct a thorough analysis and consider your own risk tolerance before making any investment decision. Remember, past performance is not indicative of future results. So, I hope you like this video, guys, and if you like it, please like and subscribe. See you next time.